Hi guys, today it's part 2 of the series Compounding Trader, and we will tackle entry and how you actually enter trades and what is less known about entering trades. So first things first, let's have a short recap of what we have discussed about last video, which was the type of ideas that we can implement into the market. And they can be of three types: A, B, or C. So basically the difference is the way that you are seeing this idea into the market, the amount of risk that you are going to add. So what kind of wager you are going to put for one of these ideas. This would be the difference. I will probably tag the last video to you so you can see exactly what I'm talking about. Also, it is very important to check that video out, because this entry video will be based on that video that we just discussed about last week, or I think it was 2 weeks ago. Nevertheless, the thing is, I do not promote actually entering trades without knowing your risk limit, right? So if you are going to implement an idea into the market, I would strongly advise you to know exactly how much you're going to risk on this idea. So how much money you're going to wager for your idea to work out. What I'm talking about here is, for example, if you have one of the three types of ideas that we have discussed about in the last video, there will be different kind of risks. So the risk is volatile, as we have discussed as well. I do not think that of course, unless you're never compounding your trade, the risk is never just stable. Only on your initial position is that your risk, or the amount of money that you're wagering on your idea, is going to be exactly the same throughout your whole trade. So let's get into it smoothly. I will explain firstly what exactly I don't like about the industry of trading. So what I don't like is the fact that everybody is monetizing technical analysis. Everybody is talking about technical analysis at a granular level, and this is something that I probably did as well some time ago, maybe a few years ago. I think that this is only good for having a hunch of what's happening in the market, but I think that most people use it as monetizing their courses or whatever, just because it's easy to make something complicated. Okay, I don't know if that makes sense, but it's very easy to overcomplicate something and sell it to the people that are not that experienced in this trading game. I will never do that, and that is why I don't think that technical analysis is the holy grail. But let's see on this chart, for example. This is a 30-minute chart for today. Okay, we have had the weekend price action right here in the overnight range that we have just broken out of, and I am interested to see how exactly could I enter this trade. For example, let's say I don't have any trades, and let's see that I would have wanted to have a trade. I am mostly a price action trader. I am using these ranges that I will also explain sometime in the near future in the next videos. These are not, it's nothing special, right? So it's just encapsulating the weekend price action, encapsulating the 2-4 hour candles that I'm not a part of. So I'm either sleeping or I'm not paying that much attention. Okay, so this is really important for me, and I'm barely using anything else, right? I'm using profiles, and nothing much here. For example, this is a profile that I have for the whole range. It's really nothing special. Mostly, and what I care about most, is just price action pivots. For example, the pivot at 94k that we have just put in before touching the value area low over the weekend. I have my statistics regarding, for example, how the lows that are put in the weekend are actually pretty strong, and I'm expecting this low on this weekend to actually be so this low here, I'm expecting it to be not touched until further notice. So I expect an actual move up from here. So let's say that I have the statistics of mine. I know that we have a pivot here around 94k, right, that we have dropped from, and I am looking for a move to the upside. Okay, so I'm looking at the move to the upside. that is fine. I know that this low here is a good stop loss point. So what I will do now is I'm already in a trade. Okay, I'm already in a trade from like 90.5k, and I'm actually also in a trade on Solana on my funded account that I have won last week. I'll also get into that in the next video, which will be the trades, the trade debunking for November. But let's just focus on this video for now. So I know that, for example, from my statistics, this low here is important. What to do now if I am not in a trade? So let's just go on a 30 minutes and do it like this. I have a wick here. It happened at 12 a.m. last night. So I can say something like this. Okay, I can either say that this low here will be pretty important intraday, or I can say, okay, I don't really care about this, and I think we will retest the value area low. What I would actually do here, if I would not have any trades, is just wait for a retest in the upper part of the weekend price action and the overnight range here, so maybe at the middle of the range, and I would say something like this. Let's just say that we will have something like a move here, and then we will go here, right? It's important to take this trade and understanding exactly how much you are risking on this trade. Okay, so we had the last video, we had A type, B type of ideas. Yes, my writing is not the best, so let's say B type. Okay, this is better now, and C type. So when we're going into an A type of idea, I'm thinking of a swing trade, and I can probably wager around what, 1 to 2%, right, of my trading capital. That would mean that for a 50k account, so let's say 50k, you can wager around 500 to 1k dollars. Okay, so 500 to 1. Okay, then we have B type of ideas, which are around 1%. 1%, so 500. So if I choose it to be a B idea and to implement a B idea, I would say that I would need, this is a 1 by the way, holy, I'm not good at writing, whatever, it's a 1 here, right? So this is a 1. Okay, this is even worse. Let's just do it properly. So this is 1, it's 500. And then you have C types idea, which is a scalp. It would be 0.5 to 1%, so 250, right, to 500. Let's do it like this. So at this point, you are up to having 3 ideas on your plate, A, B, or C. In my opinion, this is hard to be classed as a type idea. Why? Because we have quite a lot of quota under this entry, right? So I would say, okay, this can be a swing trade, but I would probably class it as a B type idea. So let's say that my entry will be around here. So if my entry is around here, let's say 90.5k, 90.5, so 90.5, I need to have maximum 0.5. I need to have a maximum of 1%, let's say in the ballpark of a 1% risk. So at this point, you're at a 1% risk, that's $500, which would mean that your stop loss would be maximum around 85.5, right? So 85.5 is around here. But we're actually, since from our statistics, we know that this low is pretty strong. And if you're looking at a 4-hour chart, it looks pretty strong actually, right? We can see the impulse here. We can see that it took liquidity from the Friday low. I think this is looking pretty good. So I will have my stop loss put around here. If it's here, it's around $300 of risk, right? So if I have $300 risks, it's actually pretty good. It's like a 0.5 to 0.75 risk. So at this point, I'm saying, I'm implementing a B-type idea. So B-type idea with a 0.6% risk. So B-type idea with a 0.6% risk at this point, which is pretty good. Now, this is a good entry, okay? This would be a good entry. What is the most important thing that you have to keep in mind is that I'm not using overly technical technical patterns. I'm not looking at, oh my god, this is a cup and handle on the 5 minutes or 30 minutes. This is bullshit. Okay, this is absolutely, I'm not using random indicators, random lagging indicators like RSI or anything else. I'm just using proper price action. I have my statistics and I'm actually working with that. Okay, so the most important thing you have to do is find your proper system of entry. In my opinion, this is a good system where you think before you enter the trade of exactly what you want to wager for your idea. So for example, for me, this would be a B-type idea that I would wager 0.6% of my total capital towards it. Okay, so this is a 0.6% wager. If it goes to my 0.6%, I just lose my 0.6%, which is fine. But if it goes higher, if it goes here and then it goes higher, then I will be looking to actually compound at around 92k, right? So I have my weekend price action high that is actually coupled with the overnight high for the Monday session. So why not? I can compound here if I'm looking to take this higher, okay? But if it's going to go lower, I'm never averaging lower. This is very stupid. Keep this in mind. You only add to your winning trades, never add to your losing trades. That is very bad and that will get you to ruin faster than you would think it would. Okay, so this is one entry technique that I use. I think this should be promoted. I think this will be the main entry technique that we will be using in this series, and I would think that with this it's more than enough. Obviously I will show you what exactly I'm thinking when I'm saying weekend price action, overnight range. I already briefly explained it, but I have a tactic around this and I like trading like this. It makes sense for me, so maybe it will make sense for you as well in the following videos. Nevertheless, I think this is pretty much it for the entry model. To be honest, it's not much of a big deal. This is important because I do not really care about entry. Okay, so if I have a good, let's say, technical and price action and charting entry, and I have my risk properly set, then I can say, sure, no problem. I can see where this trade will go. I will not touch it if it goes lower, but I will compound it if it goes higher. So I am mostly interested in managing this trade. Having it properly entered is not really something I care about. Okay, I think everybody wants to, like, I don't know, catch the bottom or like catch the top. Nobody cares about this. Okay, if you're an unprofitable trader, you will care about this. If you know what profit means, you will never care about this, because you know that there are always opportunities, and you know that entering a trade is fine, it's whatever, but most important thing is to manage your trade properly, you know. So in any market, there are bears, there are bulls, and there are pigs. The pigs want to catch every bottom and every top, and they get slaughtered. So keep that in mind going to the next video. Thank you for watching. I know this is probably too simple to be true. I know this is maybe too simple, more simple than expected, but this is more than you need. This is, trust me, this is more than you need. You can just take your technicals, just reduce them by 75%, find a proper entry model that you're fine with, just like this. Maybe just literally copy this, just take it as I'm implementing my idea. I'm wagering I don't know, 0.5 1%, and then yeah, that's it. Pretty much. Don't overcomplicate things in trading. That's literally it's a disease. Just don't do it.